Well, hello to everyone in this very first quarterly round table of Baltic economists. I'm very honored to have a distinguished panel of experts today, starting from the senior economist at Swedbank Lithuania, Ms. Greta Ilekyte. Hello.
Hi.
Chief economist at SEB Estonia, Mr. Mihkel Nestor. And later we'll be joined also by chief economist at Bank Citadele in Latvia, Mr. Karlis Purgailis. Welcome to you all. So the format of this roundtable is very simple. We give the floor to each economist for, let's say, uninterrupted 3 to 4 minutes, and then we jump to questions, to comments, some observations as well. So I think we may start with Lithuania, because I know that Lithuania has a new government. There's a widespread tax discussion, workforce discussion, rising wages, 4-day work week, and release of the second pension pillar next year. So in that context of the inflation, of course, Greta, the mic is yours, as to say.
Yes, thank you for the introduction. And I completely agree that we have a lot of news coming every day, and we have a new government which has been formed quite recently. But before that, before coming into details, I just wanted to emphasize that Lithuania's economy is quite exceptional, not only on the Baltic level, but also on the whole European level. Lithuania's GDP grew by almost 3% last year, compared to much slower average growth in the Eurozone and the European Union. This year, again, we expect the GDP growth will be close to 3% and much higher growth than in Estonia and Latvia. So it's kind of like, we are a bit an exception compared to the other Baltic neighbors and also other European countries. So we have a really good base right now. We do have strong household consumption. We do have strong manufacturing. We do have quite high wage growth. But next year, we expect these tendencies to be even boosted more by the second pension pillar reform. So the same as in Estonia in 2021, Lithuania's government decided to allow people to withdraw their money from the second pension pillar reform, and we expect that around 3 billion euros will be withdrawn from the second pension pillar and will be spent by households. So definitely inflation and GDP growth will be boosted next year. And after this big party next year, we all love big parties. In 2027, we expect a hangover, but the worst thing is that the biggest hangover will be felt in the long run, because when it comes to population growth, when it comes to working age population growth, we don't have good tendencies to allow people to actually just stop saving for their retirement. So on the one hand, we do have really great tendencies when it comes to Lithuania's economy right now. On the other hand, I think that these reforms, when it comes to allowing people to withdraw their savings, are really short-sighted and will put make a lot of damage in the long run.
Yeah, how would you characterize what's on the table of this new government? I hear a lot about taxes. Is that a big issue?
So the funny thing is that the new government, at least officially, said that they're not going to make any new taxes, not implement any new taxes, but at the same time, they're still talking about new taxes, for example, for banks. As you may know, we do have bank solidarity tax, which has been in place from the last government, and it is coming to an end in 2026. The tax should not be applied anymore, but new government is still talking about maybe some new taxes for banks, but we're not sure about this. They're also talking about Ignitis, our electricity provider, national provider, which has been listed in in the market. So, I mean, we do have some strange suggestions, which I'm not sure if we do have time to discuss.
Do people think also that this is strange, or they think that it is brave?
When it comes to Ignitis?
And yeah, like to everything, like a four-day work week, for example.
Yeah, 4-day week also, it was really strange discussion. It appeared from nowhere. So our new prime minister said that we should have 4-day work week instead of 5-day work week. But I mean, so we do have some strange, maybe at some point brave suggestions, but I feel that we need more discussions on a broader public level to just make sure we understand what we're talking about and what we are suggesting.
That's right. Colleagues, do you have any comments or maybe questions?
Well, I think it's just good to hear that Lithuania has been doing so great in recent years that they can allow themselves to have a shorter working week now.
Yeah. That's one thing, and what Mihkel, you went through this with a pension, with the second pension pillar and releasing money to the public. So, what are your words of wisdom to Lithuania about this one?
Prepare. Actually, from the economists' the point of view, of course, I wouldn't like to see that Estonia has been the inspiration for Lithuania in that sense, but as said, at least here in Estonia by politicians now, the people have their freedom to do their investments themselves, and at least in case of Estonia, they were just lining up in supermarkets buying new TV sets, new lawnmowers, renovating their kitchens and so on. So they finally got the freedom and invested where they really like to put the money. In a sense, it was kind of as already Greta actually explained, is that what happened and what will most probably happen in Lithuania is that we had really a huge party in shops. Many companies were seeing the best results over the years, but now after that there was a hangover, and still the situation hasn't changed that much. So many of the retailers are complaining that there aren't enough customers, and even if they're coming, they're still buying the cheapest things they can find in the shop. So there will be a hangover, and it could be a long one. But we are also. Yes.
Yeah, sorry, I just wanted to add to this that when we look to and analyze financial literacy, so in Estonia, we have a much better financial literacy compared to Lithuania, which is the lowest among the Baltic states. So I would probably expect that the party can be even bigger in Lithuania compared to Estonia because, well, people that are not planning their future financially, they are expected to actually spend the money. Like even more people can spend these withdrawals from the second pension pillar.
I would just only add that the Estonians like nice things also.
Yeah, despite financial literacy, and you don't expect them to put the majority of that money in the markets. Karlis has joined us. Karlis, you also work partially in Lithuania, the bank. I mean, how do you see this from different aspects? I mean, from inflation and everything.
Hello, everyone. Yeah. Well, yeah, we're watching closely the events around the second pillar reform in Lithuania because actually I'm also head of asset management here in Latvia, managing second pillar here, and we feel this political pressure and political risk also here in Latvia, and yeah, there are worries that our politicians could follow both Baltic states regarding the second pillar pension. But yeah, I expect that there will be huge pressure on inflation in Lithuania due to this reform, and there will be
Yeah. Yeah, well, but nonetheless, we can congratulate Lithuania on very smart decisions before, and now you are in a completely different cycle as two other countries, as you mentioned, Greta. So, Mihkel, we turn to you and to situation in Estonia. Yes, fire away.
Well, there are very few things to be proud of, but things are improving. So it seems that our recession has ended, but the pace of growth that has followed has been not what many were expecting for. So very low figures, but in a sense, as an economist, I'm happy because almost every economic indicator I regularly watch, they're improving. But I think it's true that many people are accustomed to having a very, very quick growth. So hoping for like a 4 to 5% GDP growth, I'm not too sure that it will ever happen here again. So the closer you get to the ceiling, the more difficult it gets. What we are also expecting is that I already told some words about the retail sector and the domestic consumption, but what we're actually hoping for is more demand in the Nordic countries, because makes maybe Estonia very different from Lithuania. So we have roughly the same share of trade in our GDP, but when for Lithuania the main markets tend to be Poland and Germany, so Estonians do most of the trade with the Nordic countries. So Sweden, Finland, Denmark, and Norway, they comprise roughly 40% of the goods trade. And well, having those interest rates we had, and knowing that those countries have one of the highest indebtedness levels of the private sector in the world, then of course they were hit hard, and they still feel it, because especially the Nordic construction markets, I'm not exaggerating when I'm saying that nothing is happening there. So when you look at the number of sales of apartments, you look at the construction volumes or the new building permits, so they're in every country almost they are at their historic low. So never ever has there been so low figures. And well, just looking at what was in that trade that the Estonians did with the Nordics, was that in case of Sweden, for instance, I would say that roughly half or even more of that trade was somehow related to the real estate market. So be it the prefabricated buildings or doors or windows or furniture and so on. So everybody are expecting that things will turn to be better in the Nordics. I have a promise from my Swedish colleagues that the next year the Swedish households will start to spend more, but that will take time to really see that in Estonia's trade figures. And maybe adding on the domestic economy. So what I really envy of in Lithuanians is that the optimism. So in Lithuania, in consumer surveys, so most people are happy with their current situation and say that things will be even better in the next year. In Estonia, things, according to, again, those surveys are awful and will be even worse in the next year. And I'm a big believer in this behavioral economics, and the narratives that are being told right now in the economy of Estonia, they do not, make people to make positive decisions, to invest in their business or make big purchases.
Yeah, unfortunately. And what I say to my friends, if you want to really catch a shock, you need to go into a supermarket in Tallinn and go to food section and look at the prices. Look at the prices. So, do you have any comment on that?
Well, that happens when the food prices in the global market go up, and then you find it clever to increase the VAT tax twice in a row and have the highest taxation of consumption almost everywhere in the OECD countries.
Yeah, that's logic. That's just logic. Uh, any comments about the situation in Estonia? How you see it from your perspective, Greta, Karlis?
Well, I agree on the government policies and government's additional taxes and fees that it's kind of the recession in Estonia was made worse than it should have been. And I think for other Baltic states, it should be as a lesson that when times are hard, you should not make it even harder.
Yeah, that's a
Our
good point.
government's official economic policy for 30 years has been that we do it pro-cyclically. So when the things are bad, then we increase the taxes. When things are good, then we decrease them, and so it goes.
Yes. Karlis, your comment.
Yeah, well, for Latvia, Estonia is second largest partner for exports, and we definitely feel the pain you are struggling through. And yeah, it was a bit of kind of shock that your government took the decisions they did, and yeah, hopefully. Not only the bad decisions are copied in terms of second pillar, I hope that in terms of taxes won't be copied to our state as well.
But as I have heard, then at least you have these release of car taxes. Yes.
Oh, that is the hottest topic in Estonia. I think the main reason why the consumer confidence is low because the basic human right of every Estonian man is his car, and taxing it. This is the biggest crime a government could commit. And well, now before the elections, it's funny to see the discussions that some of the parties that were explaining to the public that why having a car tax is good are now retracting and saying that we should abolish it.
Yeah. All right. Thank you very much, Mihkel. Karlis, your turn.
So yeah, I would say that Latvia is somewhere in the middle between exceptional Lithuania and then struggling Estonia. We've been doing a bit better than Estonia recent several quarters, but the good thing is that the last second quarter of this year was positive for Latvia. GDP rose by 1.7%. We were anticipating that this positive movement will start in the beginning of the year and would be fueled by internal consumption. But unfortunately, due to the geopolitical and tariff uncertainties, we didn't see this internal consumption building up. Therefore, the first quarter was still slightly negative for us. But yeah, in second quarter, both the confidence of consumers and then the real sales in retail has finally started to tick up, and yeah, retail sales increased by 1.7% in July year on year. And yeah, hopefully this sentiment will stay here. Yeah, on the other hand, the wages are increasing still very rapidly, similar to Lithuania, and actually the purchasing power is I would say all-time high at the moment for Latvian people, but they do not hurry to spend the money. Vice versa, they are building the savings, and unfortunately, those savings are made only as a cash balances with the banks, on-demand balances, and yeah, the deposits with banks have grown by 8% year on year last 12 months. which says that people are still cautious, and there is a potential for internal consumption to grow quite rapidly in the upcoming periods, and yeah, I hope that this will play out for us as a support for the economical growth during further quarters, upcoming quarters. On the other hand, the manufacturing is growing quite substantially. It was 4.9% in 7 months compared to last year's 7 months. Exports are a bit growing. Lithuania is our largest partner for exports, and we feel that the traction from their good economical cycle. But I would say, fortunately for all three countries, the tariff worries didn't play out as we might have seen, and this won't be kind of a risk that we will face materializing in upcoming months. So things are getting better.
Yes, I want you to elaborate a little bit on the wage question, because in Lithuania I see that, for example, the investors like Rheinmetall is coming in. They are looking for people, for employees with a higher wage level. I haven't seen something like that in Latvia, but how would you explain the growing wage phenomena?
Is that a question for me?
No, it's for Karlis. It's for Karlis, yes.
Oh, so sorry, I thought it's for
I just gave an example, Lithuania as an example, because I understand where the wage growth could come in Lithuania, but I haven't seen something like that in Latvia.
What we have seen that actually last 2 years, the higher wage growth was in the public sector rather than in private sector, and even though that last year's budget implied that for public sector there will be cap for wage growth at 2%, we didn't see it capping out or materializing in the beginning of this year. On the other hand, the private sector was more moderate growing in 2023 and 24, but it's a bit accelerating now in 25, and so in total the average wage growth still continues to be a bit above 8%, which is actually unsustainable both for the public budget and for the enterprises to sustain in the longer run. So this is something we expect to be cooling down, but still it's a huge systemic risk for Latvia, because employment market and demographics do not play in favor of stopping this quite fast wage growth pace.
It does not add up. Greta, Mihkel, do you have any questions, comments to Latvian situation?
I have maybe a question, firstly to Karlis, but maybe Greta can also add in Lithuania's case that I think what we have seen here in Estonia now in the recent years is that the government is having really hard time in really paying for everything. And due to that, Estonia's taxation level as of GDP is rising pretty quickly. So we used to be roughly at the OECD average of 32 to 33% of the GDP as a overall taxation level. Now it will rise above 36%. And I have previously argued that this is kind of illogical, that the higher the living standards get in the Baltic countries, then the convergence will not only happen in the living standards, but it will happen everywhere. And that means that we will converge also with the taxation levels, the public debt levels, and budget deficit levels. So how do you feel about Latvia and Lithuania, that what the future holds?
Well,
Karlis,
from Lithuania
okay, Greta first.
Side. Oh, sorry. Sorry.
No, go first.
So from Lithuania's side, I definitely agree that if our economies are growing, we have higher living standards, we want to have better public services. Like, that's the most important. We don't want to wait in a hospital. We do want to have really good education, but at the same time, at least what's happening in Lithuania, that people want to have all the good services, but they do not want to pay higher taxes. And somehow there is this mismatch in understanding that, I mean, it's the same pool, right? The budget is the same pool. And I think in the future, we don't have any other option as to increase taxes. And we did have this tax reform quite recently, but unfortunately, I think it was only like really marginal reform, if we can even call it as a reform, because taxes were raised for some, but I mean, the budget income from the tax increases will be really small. So I think there's no other way for at least Lithuania in the future that we will have to raise taxes, especially with this second pension pillar reform, or maybe I should call it second pension pillar destruction, because it's not a reform. We don't have any other suggestions how to save for the retirement. If you are having this destruction, then definitely, I mean, if you want to have higher pensions, you don't have any other way just to increase taxes in the future.
Well, I would say Latvia's case, even that we are improving our public services or improving the scope, increasing the scope of public services, we just increase the cost of sustaining the current system. And what we can see that during current budgeting period, the current government is not able to find a solution how to decrease the public spending in general. They are arguing about marginal decreases, bits and pieces here and there, but no substantial solutions. Vice versa, the government has issued the kind of order to look for all the ministries how to kind of decrease the services and quality of the services that public services provide to the public, in order to kind of not to increase further this spending. But yeah, I believe there's a lot of space to decrease the public spending, at least in Latvia, and this is the right way to go rather than to increase the taxes.
All right. I would say thank you very much for this lovely and lively discussion. Greta Ilekyte from Swedbank in Lithuania, Mihkel Nestor from SEB in Estonia, and Karlis Purgailis from Bank at Citadele. Thank you very much all for your time, and I hope to see you back someday in Median Report. Thank you.
Thank you.
Thank you.